Okay, welcome to the Swing Trading with Cycles channel. We're going to do a review of the broader markets today. It is Fed Day. We had the announcement. We got the 75 basis point rate hike as the market was expecting. And I would say, more importantly, the press conference, I would encourage folks to just watch that or just watch his announcement, right? It was like maybe 10 minutes, a little speech, and then there were a lot of questions. But that made it clear they're looking to continue to hike aggressively. So if you're not following me on Twitter, definitely take a look at the link in the description. I put out timely updates there when I can. It was a very busy day, but I was sure to tweet out that I did buy puts today. We had a massive sell signal. So this is your daily candle, or excuse me, your daily chart. SPX will start with, and look at this thing. I tweeted about this yesterday. Again, if you're not following, take a look at the link in the description. But this was a possible daily cycle high, right? We made this high here, then we got consolidation the next day, came up and made a new high, and then also made a new low. Again, talked about that. That's a bearish outside candle. And then today we got massive follow through. Of course, we knew the Fed announcement was going to give us some volatility, and that's what this upper wick is, right? We tried to make a new high, which just kind of ends up being a lower high, and then we continued down. And we'll look at the futures because we actually are getting a little bit of a bounce, right? So this is the futures, the daily chart right here, right? So you can see, this is, again, so this is November 2nd, Wednesday night. It's about 9:40, so we've been trading for a few hours now, almost 4 hours. And you can see we've already made a new low. This is your daily chart. And now we're trying to reverse up. So the same way that this was a bearish outside candle, and this is the futures, not the S&P cash, which is what we're looking before. We're looking at this because it's trading live, right? This is threatening to make a bullish outside candle. It would have to get above this high here at 39.07. I doubt we're going to get a 125 point rally in the next day. It's possible, certainly, but it's important to know those levels. But that's interesting that we're trying to make this little reversal here. This is your hourly chart. Again, these are the futures. This has all the look of a bear flag. We could certainly come up and test these highs, but these big wicks here, that is distribution, that's supply. That's probably going to be hard to get above, right? So we'll go back to the SPX chart, just thinking about the cycle count. That was day 13 yesterday, and so now this is day 14, right? And so you think about this daily cycle that topped out on day 4 and then declined for another 23 days. That was obviously extreme, right? This one topped out on day 14, declined for another 11 days, right? This topped out on day 23, declined for another 31 days. Yikes. So what do we have in store for this one, right? Well, let's look at the weekly chart. That could help us, right? So we drew this in the last update, this idea that the Fed meeting was going to be pivotal. This is week 3. We made a new high. And so are we going to continue to move up, probably get a low, and then just keep moving higher? Or do we make a low, lower high, and then continue this path? So it looks like we're going with this path, right? That's important. What this is saying is that we potentially, and I'll delete these just so it's easier to see the chart itself. This is suggesting that we may have just gotten a high on week 3 of the weekly cycle, right? This weekly cycle rallied for 9 weeks. It's possible that this one is only going to rally for 3 weeks. And notice this one only rallied for 5 weeks, right? So definitely not unprecedented to have one that rallies for 3, especially we'll look at the cues where we're almost having a bout of deja vu. Here's the important thing though, we still haven't made a low below last week's low. So that's what I'm expecting to happen at the very least. That's why I'm holding those puts pretty confidently. So that would be a low below 37.41.65. We may see a reaction there, some kind of bounce. And if we continue to see bearish reaction from there, that would be an opportunity to maybe add to the trade, right? Like once we get that confirmation that we're below there. But we'll see, some of the other indices have already done that, right? And then we'll move on to the monthly chart finally. Again, this was mentioned in the tweet thread. It's really early. I mean, it's literally only been 2 days of trading so far. But we're setting up for a bearish outside candle now, right? Because the same way that we're setting that up for the weekly, that has a potential to play out on the monthly. That would be making a fresh low for the year, right? That would be below 34.91.58, the low from October. And this line here, mind you, is your 50-month moving average. So we still haven't closed below it. Notice that we actually didn't close below it during, well, we no, actually we did close below it during COVID. Just a whisker, right? But this protracted decline from the global financial crisis, we lived below it. And of course, this decline during the 2001, 2002 bear, like we get below that average, right? When you zoom out, and it would seem like we're having one of those kinds of things, right? Where, I mean, again, listen to that press conference. The Federal Reserve is aggressively fighting inflation, and that means asset prices are likely coming down. I think it's also important to know that macro context. And finally, look at this, right? We topped out on month 22, and we've been talking about this. We're declining potentially into the 3-year cycle low at 36 months. And oh, by the way, it doesn't mean we're going to get a low exactly on month 36. And, maybe it comes a little bit early, maybe it comes a little bit later than that. But even when we do get a low, it doesn't mean it's going to be a bullish cycle, right? We could have a cycle that's left translated, this next one. Like this one was right translated because it ran for 22 months. Now, I'm assuming that it's right translated, right? What if we don't get the low until like month 50? Then this won't be right translated, right? It would mean we had a 22-month rally and then like a 34-month, 38-month decline, right? That's just a hypothetical scenario. But that's what you want to be prepared for all of the sort of event, like the potential, right? And if we look at the Qs, this is showing us something much more dramatically bearish. So the Qs never made that high on day 13, right? Look at that. For the Qs, it's actually a lower high. Like you can draw a trend line right down. You don't need to because you can see it with your eyeballs. That's what a downtrend is, right? So the Qs have been in a downtrend since day 8. Right, so this is your low, that's your lower high, this is your lower low, like this low lower than this low. So now you imagine there's going to be a bounce, it's going to be a lower high, and we continue lower. So bounces are going to be opportunities to short, and we'll talk about that in detail as things kind of unfold. And so that's day 14, and if we look at the weekly chart, more importantly, we've already made a low below last week. Right, so last week's low was 271.97, and we're here at 265.68, meaningfully below that. So another way to put that is we already have a weekly swing high. So this is already telling us that this might be the top for the weekly cycle. And you can quibble and say, oh, well, this wasn't a weekly cycle low, we're just continuing the weekly cycle decline. Who cares? Does that really matter? The question is, are we in a downtrend on the weekly level or not? The answer is yes, right? Like that's what really matters. And again, just like the S&P, last weekly cycle rally was 9 weeks. This one could be topping out at 2 weeks. Notice this one was exactly 2 weeks. That's what I meant when I said deja vu, not unprecedented by any means. And so again, at the very least, it's no touch, if not outright short, if you're aggressive. And for the Qs, we're much closer to making a new low on the monthly. But notice, in the same way, because we didn't make that higher high, we are still, like this is actually just an inside month. I'll zoom in just to make sure we can see that, right? This action, right, this is your monthly candle for November. Again, it's just 2 days of price action, just Tuesday and Wednesday. But it's still inside the range from October, which itself is basically a bear flag of the move down from September. So again, this is just a lower high structure. This is a whole bear flag in unto itself. It portends lower prices for QQQ, which means it's going to drag down the S&P. You think about the correlate, like the amount of big names in the queues, and we know why the queues are melting down. We've had the nasty earnings. And finally, for IWM, I mean, man, what a dramatic move down. And just like the S&P, DCH looks like it's day 13. On the weekly, this also made a new high on week 3. So this is a little bit stronger than the Qs is one way to kind of think about it. And on the monthly, it's doing the same thing. And finally, let's look at DIA. That's the ETF for the Dow. And so that had been like a little bit more bullish. So 1, 2, 3. So same thing though. Well, no, actually, that's interesting, right? So the Dow actually made it like in the Fed driven volatility, it actually made a new high here on day 14 and then came down and failed. So again, I hope you're paying attention. This is a bearish outside candle, right? Again, if we just like zoom in, we made a new high above the previous candle and then made a new low. So that's important to know about. And what is the weekly? Right. So look at the weekly. We're a lot further above last week's low than any of the indices. We're here at 321 and last week's low was just below 312. Yet at the same time, you know, what are the odds that this can kind of hold up, right? So now you have this kind of tug of war. Does this hold things up or does it get pulled down? That's going to be interesting to watch for sure. And the monthly is, so the monthly is red. Yeah, and again, it's just 2 days of price action. But it's the same potential pattern as the S&P, where we could make a bearish outside candle for the monthly. November could become a bearish outside candle. And you think about this, we had that higher high on the monthly. Again, because of the Fed situation, it was kind of meaningless. These last few days are kind of chopped. But again, the Fed move sometimes gets reversed the day or two after. And we have the non-farm payroll report, the jobs report on Friday morning at 8:30. So that's going to cause more volatility. So again, all the more reason why it's important to know those exact levels, the higher highs and the higher lows. So that is the rundown. Definitely take a look at the other videos, looking at the dollar, uranium, gold. But this is the big boy in terms of like the direction of most things. So thanks for watching.